Hello and welcome to today's event. I am Action Industry Marketing Specialist Jason Axted, and today, simplify sales tax compliance with Avalara, sweater weather, simpler sales tax with Action and Avalara. Today, we'll discuss how as your business grows, so do the complexities of tax compliance. Avalara Tax Solutions are the go-to distribution leaders, are the go-to solution for distribution leaders who need to ace their tax compliance game today and really grow in their business. The presenters today are from Avalara, Michael Dominguez, Senior Strategic Alliance Manager and Senior Sales Executive, Rich Krieg, who help distributors like you overcome your tax challenges and offer solutions that help grow your business. There will be time for questions during this webinar. I will highlight how you can do that. You'll see some icons at the bottom of your screen with some icons. You can ask questions, get a demo for yourself, or view any of the attached resources we have with this. Also, make sure to look out. We have some info at the very end, how you can get a hold of that fall giveaway that we have especially planned just for you to kick off the season. And with that, I will send it off to our presenters from Avalara. Take it away, guys.
Great. Thank you so much for the nice introduction, Jason. Just throwing the safe harbor statement up here that the materials for this presentation are solely for the use and context and not approved for further distribution. And I'm gonna just do a quick introduction. My name's Michael Dominguez. Like Jason stated, I'm a Senior Strategic Alliance Manager. That means I'm a partner manager. I manage the Infor Direct Partnership and also the Action Partnership. And I've been with Avalara now 3 years. And I'll let Rich go ahead and introduce himself.
I'm Rich Creech. I'm a Senior Sales Executive. I'm focused on the Infor market space. I've been with Avalara for 4.5 years now. And I look forward to working with all of you.
Awesome. Thank you so much, Rich. All right, so we're just going to jump right into it for those of you who are not familiar with Avalara. So Avalara was created to alleviate the burden of tax compliance. Many of you may not know, but Avalara is a global company. We have 14 offices and over 5,000 employees. Our headquarters in Durham, North Carolina, and we've been in operation now since 2004. Partners like Action are extremely important to us. And we have over 1,400 signed partner integrations. And the number here that's pretty astounding as we continue to grow is that we have nearly 10 billion AvaTax ABI calls made by customers in 2024 alone. And we've filed more than 6 million returns in 2024. Our customer base keeps growing. Again, we rapidly expand globally. We're up to 43,000 plus customers in 75 countries. And again, our big goal is to be part of every transaction in the world. But really, we would just want to help companies like yours alleviate the burden of tax compliance. All right, so I like putting this slide up because I was in your shoes one day as a manufacturer and distributor. I used to run a large winery, which we also distributed the wine throughout the United States. And having to manage all these different pieces of the not only logistics and manufacturing and supply chain management, but there's all the other pieces of managing the tax compliance, right? So some of you may feel some of this tax compliance pain, whether it's calculating your sales tax correctly, even knowing where you may have nexus throughout the United States. And then once you find out you do have nexus in that state, registering and licensing your business to do business in that state and collect and remit sales tax. You can see it's very challenging and can be really overwhelming. I handled compliance management for a winery for a full year, and I had to file direct-to-consumer licenses to ship wine to states because it's strictly regulated. I had to go to each state's website, figure out what the rules were for each state, and it was a very manual process that really took up my entire time. So just keep that in mind, especially when you're looking at trying to streamline your operations. Avalara can definitely help you in automating your tax compliance. I love this slide, and I'll put it up front and center because that previous slide shows you all the different worries that come with managing tax compliance. So Avalara helps streamline that, and we really like to emphasize these 5 steps to managing sales tax compliance. The first one is just understanding where your business must collect and remit sales tax. The second step, of course, is registering, collect, and remit sales tax where you may have nexus. And then the part that Avalara definitely helps on, because we are a SaaS company, is calculating the correct sales tax amount based on that taxability rule by jurisdiction. There's over 13,000 jurisdictions in the United States. It's very complicated. Avalara has a solution called AvaTax that automatically calculates that sales tax within your ERP, within Infor CSD in this case. And we can also help you track and manage your exempt sales. A lot of you manufacturers, distributors may not have a sales tax obligation, but you will have an exemption certificate obligation. And then, of course, we can help you remit and return those sales tax to the correct tax authority. So I'm just going to dive a little bit deeper into each one of these 5 steps, just to share some knowledge, maybe present some items that you are unaware of. And that first step, again, is understanding where to remit. So prior to the South Dakota versus Wayfair Supreme Court ruling in 2018, companies really only obligated to collect and remit sales tax where they had physical nexus, right, where their business was located. The game completely changed after that ruling, and now companies had the obligation to really file and collect and remit sales tax for all these different nexus creating activities. So you can see the long list here. You'll get the slide deck, and it's just a good reference if you have any types of pieces of this in your business, whether it be field sales, service staff, outside where your company's physically located. Perhaps you have 1099 contractors, even if you have some maintenance contracts, remote sales, of course. There's just a good laundry list here of nexus creating activities that are something to be aware of. Again, type of nexus explained. I've talked about physical nexus. We're going to dive into a map here of economic nexus, because now, since that Supreme Court ruling in 2018, the seller may meet a set level of sales transactions or gross receipts activity in a state where no physical presence is required, but your company could be triggering economic nexus based on the amount of sales or transactions you're doing in those states. There's click-through nexus, affiliate nexus, that goes to remote retailers. And then, of course, you have marketplace nexus with the gross of those marketplace facilitators. All right, so this shows the different economic thresholds by state. So you could say it gets a little complicated, right? Because each state is different. You can see that some of the higher economic nexus threshold states, either by transaction or by number of transactions or the amounts, are really high in California, Texas, and New York. And this is really challenging, especially if you're a company that's doing this manually, right? Because you have to keep up to speed on how much that you're transacting, what's the dollar amount in those states. Did you want to maybe touch on this a little bit more, since you work with a lot of prospects and Rich, on just the economic nexus and companies understanding that?
I would. If you could go to the next slide, I do believe what most customers that I work with, they're selling into multiple states, not just the states that they're registered in, and they're not doing a really good job of understanding the economic nexus rules around exempt sales. If you take a look at this slide here, Michael, you'll notice that it's pretty much beige. And that means that exempt sales count towards those economic thresholds in those states. A lot of the companies that I work with on a daily basis don't have an understanding. They just know those sales are exempt, but they don't realize those exempt sales could be causing them to go over those thresholds and requiring them a need to be registered in those states because they're triggering economic nexus. this is very important now, especially with the AI tools that are in place, and the states are looking for ways to bring in money or revenue for their state. And manufacturers and distribution companies are low hanging fruit because the auditors do know that you don't have an understanding of what triggers nexus, and that those exempt sales could count towards those nexus thresholds in those states, requiring a need to register and file taxes. Even though it's a $0 return, to be compliant, they want you registered, filing those $0 returns to be compliant in that state. But that's all I had to add on that, Michael.
Thank you so much, Rich. Yeah, again, a good reminder of just the obligation to manage those exemption certificates, because like Rich said, the states are getting needier and greedier. So you want to make sure that you're being compliant. So once you know where you do have Nexus, the next step is to register. So how we help support that is with our Avalara sales tax registration. That helps simplify and speeds the process of securing U.S. state and local sales tax registrations. We have a step-by-step online guide. We include the state, local jurisdiction fees, and the turnaround's pretty quick, about 5 to 7 day turnaround, during which time you can track the status of an order. So this next piece, we have a cool flow diagram here. Shows you a little bit of how AvaTax works to help with sales tax calculations if you do have a sales tax requirement. All right, let's say that you submit the purchase, so AvaTax will validate and or correct the address. It'll apply sourcing rules. It'll assign the applicable jurisdiction. Remember, again, there's over 13,000 jurisdictions in the United States and some really complicated places with many jurisdictions such as Colorado. It'll check that exemption status. Again, that's really important, right? Like Rich mentioned, to make sure that you have those exemption certificates on hand, making sure that they haven't expired. You identify the product taxability. We verify the tax holiday status. We all love tax holidays, right? But we have to make sure that it is applied accordingly. We apply any tax rules and regulations. And then, of course, we send the correct sales tax back to the checkout. And really important key part here is we store the information for future remittance to help you on your returns. I like this slide. It's kind of fun. It shows you each state's different, and they have their own take on what product is exempt and what is taxable. Just some examples here: toothbrush and dental floss. It's taxable in New York, but it's not in Pennsylvania. You can see there ice cream in Maryland, that it is taxable for Haagen-Dazs, but not for Ben & Jerry's in the state. So there's so many different rules and so many different changes. Avalara keeps up to speed really real time in order to make sure that you're not hit with any of these rates when you're filing, because all the products are updated within all these changing rules within all these various states. Did you want to add anything on product taxability challenges, Rich?
Yeah, from a standpoint from a distribution company, Michael, some of these may not, pertain to the audience we're talking to, but one of the things that I run into on a daily basis is companies are doing services or shipping, freight services. Every state treats freight services a little different. A lot of their products may be, tangible personal property, but if they're selling safety equipment and or any items like that, those could be treated different in different states. So I just like to reiterate, there is a varying taxability rules from a product standpoint, and you need to make sure you're maintaining that, or it may cause a bad experience for your customers because they know their state laws, and then they'll come back to you asking you why you charge them sales tax. It just creates a bad experience for that customer.
No, thank you so much, Rich. That's a really, really good point. All right, now we go to the next part, which is understanding those tax exempt sales. So for any tax-exempt sale, a corresponding exemption certificate is required to prove exempt status if the company has nexus. So this form is presented by an exempt organization or individual to the seller. So I like this slide because it shows you different ways in which transactions are tax exempt. So you have the buyer's business status side, right? Everyone's familiar with nonprofits, charities, religious organizations, hospitals, educational institutions, or even the federal and state agencies. But what we're really more concerned with is that intended use of the goods sold. Maybe it's merchandise intended for resale, use in product that will be resold, agriculture, manufacturing, or those tangible personal purchase to lease or to rent. Okay, this is a relatively new slide that I started using because it can get a little bit confusing about tax exempt resale. What is your obligation? So you as a seller have to collect those customer exemptions because you need to collect those exemption certificates from your tax exempt customers, right? You as a buyer have those vendor exemptions that you need to manage. And I like this auto supply chain example because it shows all the way from a components manufacturer to the parts manufacturer to the car manufacturer, even up to the car dealership, that you have tax exempt purchases, right? That you as the seller or buyer, customer or vendor are required to manage accordingly. And really that taxable purchase doesn't really happen to us, right? The end buyers, when we drive that vehicle off the lot. Again, I think this is a great slide for you all to reference and just be aware of to making sure that you're managing those exemption certificates. Is there any thing you want to highlight on this slide, Rich?
Just that, them as a distribution company or manufacturer is on the hook if they don't have those sales or those exemption certificates on hand. If they were to get audited, the auditors can really penalize, with back taxes, penalties, and interest if you're missing just, one exemption certificate can be extremely costly.
Absolutely. No, that's a great point because we're gonna touch on that. We have like an infographic towards the end of this presentation that shows the cost of a missing exemption certificate. All right, and the last part of those main 5 steps of compliance that we've been drilling in on is just remitting sales tax to the tax authority, right? So once the sales tax is remitted, those funds need to be remitted back to the jurisdiction. Each tax authority has unique requirements around remittance. Sales tax returns must include aggregated data across all the sales channels. There are a lot of nuances. Again, I can tell you from my personal experience running this large winery and doing compliance for a year, I was working with my accountant. Each state has different deadlines. Each state has different ways they want to get paid. There's even some paper remittance still out there. And so you can see handling of tax notices can be also a different nuance. Again, in multiple payment methods. So this is just something to be aware of. I'm sure if you talk to anyone in your accounting department, they're always trying to make sure that they're remitting that sales tax to the states in time and the way that the states want you to file them. So we do have a really fantastic product that helps. It's called Managed Returns. And that helps improve efficiency and bolster compliance by automating the sales tax preparation, filing, remittance, and the notice management. Depending on the size of your company, really the ROI is really clear here because it helps save time and lower costs because of doing it automatically for you. Obviously helps you stay compliant. If you're doing it manually, you will have errors. I'm sure I did when I was completing those compliance forms and getting our licenses for the winery I used to run. And then integrating seamlessly, right? Exporting that sales data from Infor and making sure that you have that accurate data to file those returns. Here's a great example. Vice President of Dylan's Candy Bar Company basically stating, we answer now with such confidence and authority that the auditors have moved on to someone else. We definitely don't want you to get to the point of being audited before when you call Avalara, but this is just a really good example of how Avalara was able to help this company save $100,000 in back taxes, interest, and penalties per year. Okay, so we really dove into those 5 steps of compliance and how Avalara can help. I do just want to highlight, and Rich mentioned it earlier, how states are really putting the pressure on, if you will, to create audit opportunities. I like this slide because it shows you some of the hot states, California, Washington, Colorado, Illinois, Pennsylvania, and New York, where there's a really challenging outlook, and we can definitely see some more action by those state auditors to find those businesses that are not compliant, because they need the revenues for their state's finances in order to run the state. And what that means is that, if you all weren't aware, about 30% of a state's revenue comes from their sales and use tax. So this is a critical source of revenue for all the states out there, and definitely some states lean on it a little bit more. So that's something to be aware of. Again, you'll have these slides, and if you're in one of those states, it's just something to be aware of as you continue to manage your tax compliance. So Rich mentioned this earlier about AI. Absolutely, we're seeing it out there. States are hiring more auditors. They're employing AI and data mining to find those states that aren't compliant. They're sharing information with other states to target non-compliant businesses. Depending on your state, they can conduct an audit, if it's within the statute of limitations, which could be up to 8 years. And then, of course, there's always the possibility of encouraging whistleblowing as well. So yeah, there are a lot of examples here of how states are definitely investing more in sales and use tax audits, because those states desperately need that revenue. And real quickly, I'm just going to scroll through these and just kind of highlight sales and use tax being very complicated for manufacturers and for distributors. Again, having to manage frequent audits. I like this slide because, when manufacturers and distributors manage sales and use tax across disconnected systems, especially if you're doing it manually, maybe one team's doing following the use tax and the other one's doing the sales tax, and other teams doing exemption certificates. It just doesn't slow down operations. It could expose your company to risk, right? We touched on it before, but there's those variable taxability rules, right, that can impact your business. And again, not having perhaps utilizing your ERP like Infor CSD optimally and taking advantage of the AvaTax integration to help you automate that sales tax compliance, and also having Avalara help you on those exemption management certificates as well, to just really help you automate your tax compliance. All right, so we talked about a lot so far. We talked about those 5 steps of compliance. We talked about how the states are increasing their audits because they desperately need that revenue stream for their states. You all are probably familiar with, at least probably you got it from this conversation. Our 3 core products are exemption certificate management, tax calculation, that's sales and use tax, and then returns, of course, right? We dived a little into managed returns. The M in these boxes means managed. And then e-invoicing is happening outside the United States and will probably eventually end up here in the United States. We do have some good supporting products. Of course, once you realize you have Nexus in the state, we'll help you get licensed and registered. We have a tool called Avalara Tax Research. I don't know if you wanted to touch on that for a minute, Rich. Oh, you still there, Rich? Okay, so Avalara Tax Research is a tool that basically helps you look up product taxability. And it's something that is useful for companies who just may need some help on the compliance side. It's ERP agnostic, and it really just helps you dial in on finding what those product taxability rules are, different rules in different states. We also have cross-border products, as well as 1099s that we can help you with, and property tax. And then, of course, we work and are integrated with Infor CSD. And we have a sales tax risk assessment. If you need help in identifying where you may have nexus, or identifying where you may have nexus, we can help with implementation, training, and support as well. And we're getting towards the end here, but we're going to do a deep dive on exempt sales and nexus. And just as a refresher, in the beginning, there was physical nexus, right? And a distributor selling nationwide, but only had 4 locations, usually only had to worry about tax compliance in those 4 states. Again, just a refresher, in 2018, we had the South Dakota versus Wayfair ruling. It upended the tax compliance landscape. Tax-free shopping on the internet became a thing in the past, and businesses now had to collect across the country. So the net result of the Wayfair decision is that businesses everywhere needed to pay attention to the tax rules in every state where they have sales. So you can see here, again, just as a reminder, nexus and exempt sales considerations, the inclusion of exempt sales in your nexus calculation, like Rich mentioned, making sure you include those exempt sales so you don't trigger an audit. Make sure you're registering and filing requirements for each of those states, because those requirements are all different depending on the state. And then again, the state-by-state variability of those exemption rules. We've seen this slide before. Rich did a really good job covering it, talking about that economic nexus with exempt sales. And ultimately, the burden of proof is on you. You know, while your customers must provide documentation, the burden is on you as a seller during an audit to prove why tax was not charged. Your $0 sales tax liability that Rich mentioned is tied to those documents. And with fines and penalties, you can't owe the state double the tax that you failed to collect. Just here real briefly, exempt sale rules vary by state again, but generally follow key principles to determine when a sale qualifies for sales tax exemption. You could see there under nonprofits, interstate sales, government, we talked about that, usage, you know, there could be an agricultural exemption, tribal government, resale, medical and healthcare exemptions, manufacturing exemptions, or direct pay permits, software as a service, product-based exemptions. So this is one of the last slides here that I'll put up for you, and it just does the infographic like I mentioned about the cost of a missing exemption certificate. So you can see here, number 1, your business is being audited. The auditor reviews a 1-month sale sample for an audit period of 36 months. The auditor finds a $15,000 sale and missing or invalid certificate, resulting in uncollected tax revenue of 8% or $1,200. So what happens then is that the auditor will assume that this amount of uncollected tax for each month during the audit period, and the uncollected tax fine is calculated at $1,200 over 3 years or 36 months. And that gets you a whopping fine of $43,200. And that doesn't even include the other audit penalties or fees that could apply.
And Michael, one thing to point out is if they're missing 3 or 4, that's just going to multiply by even more.
Absolutely, and that's a really good point, Rich. I'm here on the road traveling, and learned of an example of this, that a company was missing 3, and you're exactly right. They didn't have 3 exemption certificates, Rich, and it was a fine of $150,000, right? So that's a hit on a business's bottom line.
And not to scare anyone, this is the most common thing I hear from the customers that I'm highly exempt customers that I'm speaking with on a regular basis. These auditors, they are coming in and asking for sample sizes, and if you're missing these documents, they are going to fine you penalties and interest. A lot of the auditors aren't going to let you go back and collect them, because most of the state laws explicitly state that the exemption certificate must be on file within 30 days of the transaction.
Great, thank you, Rich. And that comes to the end of our presentation for Q&A.
All right. Well, I don't think there's any questions. I know we did have a comment for everyone on the webinar today who is using Infor A Plus. There also is an Infor A Plus connector as well, and we can give you more information on that and when we reach out to you, specifically with how to get your s'mores break giveaway from Action and Avalara. Keep a lookout for an email from me, Jason Nackstedt. That's JNJKNACKSTEDT at action.com. We're going to request some info from your address and contact information so we can send you your sweet treat. Once again, thank you for everyone to come hang out with us today. We know your day is busy, and we appreciate the time that you spent with us here today on this Thursday afternoon, the big kickoff of fall season. Also, thank you to Rich and Michael. We'll see you next time, everyone. Have a great day.
Great. Thank you.